Today's podcast episode is brought to you by Simple Mind Space, a YouTube channel dedicated to helping people master their money and their minds. The host of Simple Mind Space offers clear and actionable advice on investing, building wealth, and making smart financial decisions, even for those starting from scratch. The channel also emphasizes the importance of mindset, discipline, and personal growth, providing viewers with the tools and motivation to achieve their goals and unlock their full potential. Whether you're looking to achieve financial freedom, learn about cryptocurrency, or simply improve your life, Simple Mind Space has the knowledge and inspiration to make it happen. In today's podcast, we will be discussing the current state of the economy and the impact it has on consumers. Recent reports from Hershey reveal that consumers are pulling back on discretionary spending, indicating potential economic struggles. Mayor Fair even compares the situation to the Great Financial Crisis, raising concerns about the strength of the domestic economy. To shed light on these issues, we have invited Nancy Lezar, the chief global economist at Piper Sandler, to share her insights. Nancy begins by noting that while corporate earnings have been stronger than expected, there is a disparity between companies with a significant portion of their business in the United States and those operating internationally. Companies with a larger international presence are experiencing growth rates of 22%, while those focusing on the domestic market are only growing at 4%. This suggests that the domestic economy may not be as robust as the earnings numbers imply. Nancy further breaks down the sectors that are boosting the economy and those that are struggling. Sectors such as defense, artificial intelligence, investment banking, and e-tailers are performing well. However, there are 12 other consumer sectors, including autos, airlines, and restaurants, that are facing significant challenges. Auto sales have been flat for the past year, with excess inventory and the expectation of declining prices. Additionally, wage increases and consumer pullback are likely to squeeze profit margins in various sectors. Nancy cites the example of Hershey, where the price of candy has increased by 22% in 3 years, leading to weakening sales. Looking at the bigger picture, Nancy acknowledges that the unemployment backdrop is deteriorating, with the unemployment rate rising from 3.4% to 4.1%. She also highlights the higher number of unemployment claims, which indicates a potential downturn in the economy. Nancy mentions that she keeps a list of layoff announcements, which has been growing recently, including companies like Intel. These signs suggest that the economy may be moving into a high-risk period for a recession. When it comes to the Federal Reserve, Nancy gives them a mixed assessment. She believes they have been right to be cautious and not cut rates more aggressively, given the significant inflationary pressures resulting from massive monetary and fiscal stimulus. However, she suggests that a recession may be necessary to achieve a sustained shift down in inflation. Without a recession, there is a risk of returning to a period similar to the early 1970s, characterized by high inflation. In conclusion, the current state of the economy raises concerns about the strength of the domestic market and the potential for a recession. While corporate earnings have been strong overall, there are clear signs of struggle in various consumer sectors. The Federal Reserve is navigating these uncertainties cautiously, recognizing the risks associated with high inflation. As we move into the fourth quarter, it remains to be seen whether a recession will occur and how it will impact the economy. Thank you for joining us today on Simple Mind Space. If you found this podcast insightful, please like, share, and subscribe to our channel for more valuable content. Stay tuned for our next episode, where we will continue to provide the knowledge and motivation you need to master your money and your mind. Important main ideas. 1. Consumers are pulling back on discretionary spending, indicating potential economic struggles. 2. Companies with a larger international presence are growing at a faster rate than those focusing on the domestic market. 3. Sectors such as defense, artificial intelligence, investment banking, and e-tailers are performing well, while many consumer sectors are struggling. 4. Signs of a deteriorating unemployment backdrop and increasing layoff announcements suggest a potential recession. 5. The Federal Reserve is navigating cautiously, recognizing the risks associated with high inflation. 6. The potential for a recession raises concerns about the strength of the domestic market and its impact on various sectors. Outro. Thank you for listening to today's episode of Simple Mind Space. We hope you found the discussion informative and insightful. If you enjoyed this podcast, please like, share, and subscribe to our channel. Remember, mastering your money and your mind is within your reach. Stay tuned for more episodes where we provide the knowledge and motivation you need to achieve your financial and personal goals.